In the beginning, you don't know what it is. So to teach yourself how to grow in your understanding of where to aim for each day, what is it more likely to aim for? The previous day's high or the previous day's low? And or the day before it, high or low? Or the day before it, high or low? So in other words, you're looking at the high and lows of the last 3 days. That's exactly what I introduced first on Baby Pips. If you use those 6 levels, okay, it's 3 highs and 3 lows. Which one has been traded with a fair value gap? The one that creates one or trades to it and creates a fair value gap, and it allows you to move in sync with what you thought was going to happen for the weekly. Like, where is it going to go on the weekly chart? Is it likely to expand mostly higher, or is it expanding mostly lower? If you're trying to focus on shorts, okay, it would go without saying that you're going to try to see a move to yesterday's low, or the low prior to yesterday, or the low 3 days ago. And using the 10 o'clock to 11 o'clock, or the 2 o'clock to 3 o'clock, or 3 o'clock to 4 o'clock, or 2 o'clock to 3 o'clock in the morning, or 3 o'clock to 4 o'clock in the morning, or 7 o'clock to 8:30 in the morning. All of those are opportunities for you to look for that simple silver bullet model. Over time, with experience, you're going to determine that every single hourly candle can be traded and treated the same way as a daily range because everything is fractal. And by aiming for the previous hour's high or low, framing it with that mindset, you can start getting high frequency trading algorithm entries using a silver bullet model for a 15 or 30-second entry or fair value gap. So I could literally talk to you for the rest of today and still not really scratch the surface of answering it, in my opinion, the most significant manner of responding to what your questions ask. I understand what you're asking, but there's a plethora of examples on how to do that, and I just gave you new ones here just in a couple sentences. It's a matter of finding the one that fits you. That's why there's so many things that have to be brought from your own personal perspective and your personality into trading. Can you be in front of the charts at that specific time? Can you trade a setup that would not look like everything else I've shown so far? Because I do other models, and like I have a video that's been rendering while I've been here with you live. I'm gonna upload it here in a moment, but I'm teaching a new PD array in there, and what I actually traded yesterday in non-farm payroll. So if you understand that you are given the opportunity to bring your personal perspective, your personality, and how you are going to allow your trading to be form fitted with the concepts, not take the concepts and form fit it to you. You have to bring your personality to it. You have to allow whatever it is that makes you feel comfortable looking at price and how it invites you to engage with it. I have so many concepts, so many ways to get in that same scenario, but you just have to determine what it is you're trying to do. Are you a reversal trader? Are you a contrarian trader? Do you like to trade with trends that just have been obvious for a long period of time on the 4-hour and daily chart? If you know that it's likely to go down to a level that's 200 handles away for an index future or 300 pips for a forex pair, if that's what you're really focusing on, like if that's what the whole model is based around, and you have the commitment to hold for something like that and stay with that idea, then using any time frame less than an hour, you can do a 15-minute fair value gap with the silver bullet mindset. Silver bullet is not simply a matter of limiting it to a specific time. All I've done was take very specific generic times where order flow is going to be one-sided. That's what's occurring there, because the algorithm is going to start spooling and delivering price one-sidedly. And because its nature is to perform that way, if you look for a fair value gap in those specific time windows where the beginning and the ending of it is, it can't hide from you. It literally cannot hide from you. It's a matter of you knowing what you're likely to draw to at that given time of day, whether it be London, PM session, AM session, it matters not. But you have to warm up to the idea of whatever it is you're trying to do. Any one of those particular times of the day, that's where you should bloom, where you're planted. Plant yourself right there and say, okay, I don't care what ICT and the rest of his crew does and what their trades. I don't care about that. I don't care what new PD array or what model I release in October. I don't give two spits about whatever I talk about in the future in a book. I'm trying to nail down one thing so I can start getting good at doing one thing right now. You start with when can you get in the charts? Because if you can't figure that out or determine and settle in on that, nothing's going to work for you. But once you settle in with that, then you have to determine, okay, where's the likely draw on liquidity? I mean, that's the whole basis of what it is I'm teaching. Because if you can get to that, and you won't always be correct, are you in a state of mind that allows for that imperfection? Because many times in the beginning, people don't want to accept the fact that they may be less than 50% accurate. And that's normal for someone that's learning a new skill. And over time, you'll get to that 50-50. And eventually, over years, you'll get to 70 and higher. But you'll still have losing trades. And you'll be in a time when you think that you know where the market's going to go, draw to. I'll give you a perfect example. I was very confident yesterday that the gold market was going to sweep out that low. I literally told my youngest son, I said, I think that it's going to take that low today. And you don't know this until he's saying it, but I was wrong in his eyes. He watched me say something and outline something that didn't come to fruition. So do I throw out everything because that didn't pan out? Do I tell him, well, don't worry about learning this now because that one incident where I did it wrong, my expectation wasn't seen in the delivery of price. The model therefore should be thrown away. No. So I don't know how you engage price. I don't know what it is that you're specifically looking for and how you have been trying to frame bias and where the liquidity would be for the silver bullet to even pan out. But silver bullet is just a way for me to describe a return to a very small, insignificant piece of price action that's easily identifiable, which is the fair value gap, on a very, very small time frame during a time when it's going to run for 15 to 30 minutes minimum in one-sidedness in price delivery. So really, if you understand what I just said, there is lots of silver bullets throughout the course of a 24-hour period. And if you're using seconds charts, like 15 seconds, 30 seconds, man, there's dozens of them every day. Dozens of them. And the only thing I've tried to do is limit your focus because so many people have a hard time trying to figure out, well, I don't know what setup to do. I don't